Although retiring early can be accomplished as outlined in my prior videos, retiring at 55 sounds like a dream. A literal escape from the daily grind a full decade ahead of schedule, but for many people, it can turn into a complete financial nightmare. What no one tells you is that retiring early can actually cost you millions of dollars in lost growth and unexpected expenses. We are conditioned to think that the goal of life is to stop working as soon as possible. But there is a hidden math to this transition that most people completely ignore until it is far too late. By the end of this video, you will know exactly whether retiring at 55 is a genius move that grants you your life back, or a massive mistake that will haunt your bank account for the next 40 years. Think about the fantasy for a second. You wake up on a Monday morning without an alarm. There is no boss to answer to, no inbox overflowing with stressful emails, and no commute through rush hour traffic. You imagine yourself sipping coffee on a balcony, traveling the world while you are still young enough to enjoy it, and finally having the freedom to pursue the hobbies you've sidelined for decades. It feels like total liberation. But the reality for many early retirees is a sharp contrast to that postcard image. Within 6 months, the novelty often wears off, and the reality of rising costs, the slow erosion of your savings, and the unexpected stress of market volatility begins to set in. Most people imagine sipping coffee on a beach, but many end up sitting at their kitchen table worrying about money instead. The dream is built on the idea of freedom, but the reality is built on the foundation of your math. If that math is even slightly off, the dream quickly dissolves into a state of perpetual anxiety. The biggest financial trade-off when you choose early retirement is one that most people fail to visualize properly. When you retire at 55 instead of 65, you aren't just losing 10 years of income. You are losing 10 years of the most powerful wealth-building phase of your life. By age 55, you are typically at your peak earning potential. These are the years where your contributions to your portfolio are the largest, but more importantly, these are the years where compounding interest does the heavy lifting. Consider a simple comparison. If you have a $1 million portfolio at 55 and you leave it alone for another 10 years while continuing to work, that extra decade could easily double your portfolio to $2 million, even without adding another cent, assuming a standard market return. By retiring at 55, you are essentially cutting off the tail end of the compounding curve, which is where the most explosive growth happens. You could be trading millions of future dollars for 10 years of current time. This creates a massive tension between your desire for time freedom and your need for long-term financial security. But this isn't even the biggest problem you'll face. The hidden costs of retiring at 55 are often the silent killers of a financial plan. The first and most obvious is healthcare. In the United States, you aren't eligible for Medicare until you are 65. If you retire at 55, you have a 10-year gap where you are responsible for 100% of your health insurance premiums. For a couple in their mid-50s, this can easily cost $2,000 or more per month for a private plan with high deductibles. Over a decade, that is $250,000 just to keep your health coverage active. Then there is the issue of inflation. When you retire at 65, your money only needs to last perhaps 20 to 25 years. When you retire at 55, you need that money to last 35 or even 45 years. Over that span of time, the purchasing power of your dollar will likely be cut in half, or even more. What looks like a comfortable budget today will look like a poverty-level budget in the year 2050. Furthermore, you face a massive sequence of returns risk. If the stock market happens to crash in the first 3 years of your retirement at age 55, and you are forced to sell your assets at a loss just to pay your bills, your portfolio may never recover. This is the danger of withdrawing from a shrinking pool. Finally, there is the silent threat of lifestyle creep. When you have 24 hours of free time every day, you tend to spend more money. You go out to eat more, you travel more, and you pick up expensive hobbies. Early retirement doesn't just mean your income stops, it often means your spending accelerates. Beyond the numbers, we have to look at the psychological side of this decision. We live in a society where our identity is deeply tied to what we do. When you walk away from your career at 55, you lose your professional identity, your daily structure, and your primary social circle all at once. a lot of people don't retire to something, they simply retire from something. Without a clear purpose or a rigorous schedule, boredom quickly turns into depression. Research shows that retirees who don't have a plan for their time often experience a rapid decline in cognitive function and physical health. The lack of structure leads to a sedentary lifestyle, and the lack of social interaction leads to isolation. You might think you want to do nothing, but the human brain is not wired for perpetual leisure. Eventually, the lack of a challenge becomes its own kind of prison. So, who does retiring at 55 actually work for? It isn't for everyone, but it can be a genius move for a specific group of people. It works for those with an incredibly high savings rate who have been practicing disciplined financial planning for decades. These are the people who have multiple income streams, such as rental properties, dividend stocks, or a side business that provides passive income. If your passive income covers your living expenses completely, the age on the calendar doesn't matter. It also works for people with low lifestyle expenses who have already paid off their primary residence and have no outstanding debt. If you are relying only on a fixed pile of savings and hoping the market stays up, this gets risky fast. To retire at 55 safely, you need a margin of safety, a cushion of extra cash or assets that can weather a decade-long economic downturn without forcing you back into the job market. On the flip side, there is one group of people who should almost never retire early. If you have high consumer debt, if you have a mortgage that won't be paid off for another 20 years, or if you are a late starter in the world of investing, retiring at 55 is a recipe for disaster. Early retirement is not freedom if it comes with constant stress. If you are constantly checking the ticker symbols on your phone and panicking every time the S&P 500 drops 2%, you aren't retired. You are just an unpaid, high-stress money manager. People who haven't accounted for the total cost of their lifestyle, or those who are trying to escape a job they hate without having a plan for what comes next, usually find themselves back in an office within 3 years. But this time with a massive gap in their resume and less leverage than they had before. Many are now using a better technique. Call it semi-retirement or financial flexibility. Instead of switching from 60 hours a week to 0, you transition into a period of life where you work for satisfaction instead of survival. This could entail working part-time, remote consulting, or beginning a passion project that pays the bills. Keeping even a tiny amount of active income lets your primary investment portfolio compound. This spans 55 and 65, handles healthcare insurance, and keeps you sharp and social. Stopping needing to work is the goal, not quitting. Early retirement without excessive financial risks is possible in this middle ground. Whether retiring at 55 is good or bad depends on preparedness, not age. Early retirement does not buy freedom. It only enhances your financial situation. Wealth and discipline boost tranquility. Underfunded and impulsive people stress more. You must be honest about the numbers and psychological impact of quitting. Healthcare bridge years and 40-year inflation must be considered, as well as peak compounding years lost. Financial planning is about creating a life you don't want to leave. Retiring at 55? Worth it? Only if done well. You need mathematical precision and psychological readiness that most people underestimate. A passive income and mental fortitude might make the change the best decision of your life. If you're fleeing a job, the expenses may outweigh the rewards. What age do you want to retire? Do you dream of 55 or work longer for security? Comment below with your ideas. And if you found this video helpful, give it a like and make sure you're subscribed. I post weekly to help you make better financial decisions and build a viable future. Thanks for watching. See you next time.